Okay, folks, good morning and welcome to Stock Charts Today. It is the 11th of May, 5:40 in the a.m. Eastern Standard Time. Let's begin with the S&P 500. We are up marginally this morning, about a tenth of a percentage point. This week, the path of least resistance remains higher. I don't see a reason for that to change yet. A little bit of resistance up here at 27.25. Let's watch for a potential break here of support. We're in a very tight trading range this morning, but with the bias being to the upside, the path of least resistance being to the upside this week, we should break out. But just in case we break down, tighten up those stops. Watch volume. The NASDAQ, we are down at the margins here this morning. A bit of resistance above at 69.71. The path of least resistance remains higher with support right here at 69.50. The Dow Jones up at the margins, a bit of resistance at 24.766 with support at 24.686. So let's take our crayons out. Put our lines in the sand up there because we've been seeing these setups all week. Here. Well, this is last Friday, actually. And we have been breaking out of these setups. So volume has been lightening up of late these past couple of days on the major averages. That's a bit of a concern. We did close out all of our short positions earlier in the week. And we did get long. We are long of emerging markets. I went over this with members on Market Wrap that we would probably book our profits in emerging markets this morning. Now, taking a look at the U.S. dollar, we talk a lot about the U.S. dollar because it matters. It matters to our commodity trades. It matters to the S&P 500 stocks. Why? It's because 55% of the profits from the S&P 500s or for the S&P 500 stocks come from overseas sales. If the dollar rises, our products become more expensive. And with commodities, the price of commodities are mostly priced in U.S. dollars. So if the dollar is strong, commodities weaken and vice versa. Now, I warned earlier in the week that I believed that this rally, which is amazing, it was amazing. I expected a breakdown after this consolidation. We got a short squeeze and a massive one at that. I warned of topping action, and we did finally get a down day yesterday. And this morning, we're seeing a little bit of pressure on the dollar, not much. They tried to rally it. They failed. Watch this lower band of support here. And if we break down below 92.223 on the Dixie, we should probably head down to a 91 handle. Now, I've been talking up the price of gold and silver if the dollar were to break, right? Go back to the other stock charts today. Members, you can go back to the week ahead commentary, which is coming out this weekend. You can go back to Market Wrap. I've been talking about what I expected, and that was a rally in gold and silver. Speaking of the two, if we got a pullback in the dollar, let's go to silver first. Here's our rally off the lows. A very strong day yesterday, a very strong morning this morning. We broke out above support on a daily basis yesterday. Let's go to a 4-hour chart. Here was our breakout yesterday. We've consolidated. It looks as though we are pushing higher this morning. The price of gold. Gold pressing higher this morning after breaking out earlier in the week. The gold miners broke out yesterday. So all we need now is a break down in the dollar. We don't have that yet. And we did, in fact, add earlier on weakness to our gold mining position in anticipation of a breakdown in the dollar. So overall, a good week. Let's get to member stock chart request. The first chart up, daily chart of Costco, which broke out on Wednesday. Yesterday, we got a pullback and a retest of the breakout point, which held Stokes rising, RSI rising with a double bottom setup on RSI and a higher low. Good stuff. I think that Costco is going to move higher. So we are bullish on Costco. Micron Technologies weekly chart. Thus far this week, we have recaptured support. The week is not over. One trading day left to go. Anything could happen. But if by 3:55 Eastern Standard Time today we have rallied and closed back above this support level, and it appears as though we will close there, you could scratch the itch, open up a position, or add to your position on Micron. Don't be a bit surprised, though, next week if we get a pullback and a retest of the breakout point. That's a good thing. Stokes hooking up. RSI is hooking up. Good stuff. Volume this week, very light. So keep an eye on closing volume for the week. Daily chart. Now, on a daily basis, we broke out on Wednesday. We had a continuation breakout on Thursday, and we closed above the 50-day moving average for the first time since April the 19th. Stokes are rising. RSI is rising. Volume, light. This is a story I've been telling on Market Wrap. Across the spectrum of large caps and small caps, volume has been light. Don't ignore volume. So we've had how many days in a row up? 1, 2, 3, 4, 5, 6 days in a row up. The probability of a pullback fairly soon is very high. There's nothing wrong with waiting until next Monday to see whether or not we get a close above. This is back to the weekly chart. A close above this resistance level. And do we open up Monday retesting the what should be at that time a support level if you're entertaining getting long? Moving on, AAXN, Axon Enterprises, weekly chart. An outstanding breakout here. Cup, handle formation. We broke out back in November. Retested in January. Continuation breakout in February. And it's been off to the races ever since. RSI on a weekly basis is at 86.61. So we're a bit overbought. That doesn't mean we can't move higher. Volume outstanding. This is the type of volume that you want to see with a stock sitting with a 80 handle on RSI. Stokes are very overbought, but they could stay overbought. If you read Technical Analysis for Dummies, they'll be telling you right now that you should have shorted the shares, not just this week, but last week when the RSI was above 70 and Stokes were pretty much where they are right now. Look at the damage that would have been done to your portfolio. We're up 24, nearly 25% on the week. So be careful of generalities and rules of thumb in the market. You need to use your indicators in conjunction with price action, meaning how are we closing? Are we closing at the highs of the day or at the lows of the day? Are we selling off, closing in the mid-range of the day? It matters. Those are signals by the market validating that, you know what, we may see a change in price action fairly soon. Now, in terms of volume remains strong. You need to watch your volume as well. We're not ready to short this stock yet. Now, on a daily chart, we have topped out a bit here, stalling with topping tails. So would I be a buyer of the stock right now? No way. Because what this chart is telling me is that I have RSI at 85, which really doesn't mean all that much to me. If I saw a pullback and a bullish key reversal yesterday, you know what? Game on to the long side for me. That would have been a buy despite the fact that we have RSI at 85. Strong stocks tend to get stronger. And you need to also be careful and watch out for the size of the float and the number of shares held short. because this could be a bear trap and you won't even know it. You need to learn your numbers. Just simply go to Yahoo Finance to the statistics page. Just do some napkin paper math and see whether or not you're walking into a bear trap. So be careful here. Topping action is a sign of some money rotating out of the stock on strength. If we pull back, expect a filling of the gap at 46. I think that you could probably buy the shares on that pullback, and it will probably be quick and a ruthless shakeout of week long. Volume has been good, so be careful here. I wouldn't be a bit surprised to see a rally higher, but I wouldn't take that trade right now. I would rather wait for the pullback, a filling of the gap, buy on that filling of the gap, then get involved with the stock. Last chart up is going to be Turtle Beach Corp here. All right, this is one I already took a look at Yahoo Finance on, and I did some napkin paper math. So weekly chart, we have RSI at 93.13. Stokes are rising. We are trading above on a weekly basis the 3 standard deviation Bollinger Band in red, and we have been there for several weeks. This is an anomaly. So you have to ask yourself, why is it an anomaly? How does the math look? Well, all you have are 5.6 million shares floating around out there. Of that 5.6 million shares, 1.2 million are held short. That's why you are seeing this type of price action. A tight float and a lot of shorts on a percentage basis. Now, when you take a look at the shares on a daily chart, we have RSI at 85.70. Yesterday, we spiked higher on massive volume. This, to me, appears to be a blow-off top. I wouldn't go shorting it, though, because now taking a look at the price action, we have RSI at 85.70. Stochastics are rolling over, but I think they're going to hook back up. Yesterday alone, we were up 64.55%. I believe there was a report that was out on this company. And while we closed up strong on the day, we closed well off the highs of the day on massive volume. So would I go buying the stock right now? Me personally, no, it's difficult because I know for a fact now that we have resistance above. And we are trading above the 3 standard deviation Bollinger Band. It's not for me. That's not to say that the shares can't move higher, because remember, we only have 5.6 million shares that are floating around. Of those shares, 1.2 million shares are held short. So basically, these shares can be manipulated very, very easily. I would prefer to avoid being manipulated. And it's very important that you do this type of math. So how would I play it? I would play it on a pullback and the filling of the gap here. Don't be shocked if we get it. It will probably be quick, ruthless, but I would step in there and open up a position, especially if we overshot and pulled back and held this lower band of support. And that's it for this morning, folks. Everybody have a profitable trading day. If you watch this on YouTube, please subscribe to my channel. Leave a comment. I'll get back to you. Click that bell. Get notified of future videos. If you watch this on the website, enter your email address. Get a couple of free trade tutorials. We hate spam too. If you found us through StockTwits, Twitter, Seeking Alpha, follow me there. Leave a comment. And everybody have a great weekend. And I may put out a best stock charts this Saturday. So enter your email address and we'll send that out to you. Those are the stocks that we're looking to trade in the coming week. Be well, folks.